Hello everyone, Cory Mitchell here with TradeThatSwing.com, and in this video we're going to look at which Forex pairs to day trade and swing trade. There's a lot of different Forex pairs out there, so we're going to look at which ones to start out with, and then if you want to add in some more, which ones to potentially add in. So let's start out with day trading. The Euro USD has the highest volume of any currency pair. It contributes the most to daily average Forex volume. And it's also typically going to have the lowest spread. This may vary somewhat by broker. The US dollar yen may also be a viable option. The spread can be quite low with some brokers. The British pound US dollar tends to move a little bit more each day, on average about 20 to 25% more per day. So if the Euro USD is moving 100 pips a day, then the British pound US dollar tends to move about 120 to 125. That is going to vary over time a little bit, but just something to keep in mind. So those are kind of the three main day trading pairs. They all involve the US dollar, so they're going to be somewhat correlated, moving kind of with the US dollar. But you can see which one you like the best. I would go with the one that has the lowest spread. The reason is because the spread is a cost, even though you don't necessarily see it as a cost on your trading statements like you would a commission, where you made X amount of dollars minus your commission, you ended up with X amount of dollars. The spread still is a cost. When you're entering a trade, you're going to see yourself offside or losing a certain amount in that split second when you take the trade, because it essentially is a cost. You're paying a price. It's reducing the amount that you can make on a move. So an example of this would be like, let's just take a super simple example, not that you would want to trade a 1 pip price move, but if the price moves 1 pip, and charts are always based on the bid price of a Forex pair. So if the price moves up 1 pip, the bid moves up 1 pip, but you paid a pip to get in. So the bid price was here, you had to pay the offer price to get in to buy, which was 1 pip higher. Now the bid moves up 1 pip. If you go to get out, you're going to have to sell at the bid. So even though the price moved up a pip, you make nothing. So it is a cost in that sense, in that it reduces the amount you can make on a trade. It's basically reduced, whatever the size of the move is, it's reduced by that spread that you had to pay. So it's reducing the amount you can make. That's going to also increase your stop loss size, because you have to factor for that spread, and that's going to reduce position size. So someone with a basically zero spread could take a larger position than someone who has a 1 pip spread, because that 1 pip spread is going to make your stop loss size bigger. You have to count for that when you're taking the trade. So that person with the low spread could potentially make more on a move than someone who has a larger spread. Not only because of position size, they can take a larger position size, but they can also potentially capture more of that move. They could capture that first pip of movement even and be on side if they have zero spread, whereas someone who has a 1 pip spread would now be showing 0, even though the price moved up a pip, because they had to pay that pip to get in. So it's definitely something worth considering. Low spread, definitely better. Low commissions, also good. You may consider other pairs if they're moving well for your strategy. At certain times, certain pairs are going to be moving a lot, and they may suit your strategy well for a time. But generally, the Euro USD, the USD JPY, and the British pound US dollar are the most common for day trading. I'd say focus on one of those to start, and just focus on one pair. Don't look at multiples when you're starting out. You want to get good at executing on one pair before you start adding in others. Over time, you could potentially start looking at multiple pairs to get more potential trading opportunities. but it's not required. Trading one pair should be enough. There's lots of people, including myself, when I day trade Forex, I just trade the Euro USD. And there's typically enough movement and activity and trade signals to get opportunities each day. Maybe not every day, depending on how long you trade. If you're only trading for an hour or two, there may be days where there's nothing, but for the most part, you should be able to do well just with trading one pair. Add in more if you want down the line. For swing trading, these are the major global currencies. When starting out with Forex swing trading, I would stick to currency pairs that involve these. These are heavily traded, the most used currencies in the world. They're called the majors. And so we have the US dollar, the euro, the yen, the pound, the Canadian dollar, Australian dollar, Swiss franc, and New Zealand dollar. So trade, a currency pair always has two currencies in it. So you'd trade a mix of these. So maybe it's the euro US dollar, maybe it's the euro JPY. So let's kind of look at a breakdown. I made this chart. So when you're starting out, I'd start out with these. These are the heavily traded currencies of the world. So this is where you'd start out. I would look for signals in these first. And maybe only start with a handful. Maybe you only start with the US dollar, the yen, the British pound, US dollar, kind of those like really major currencies. And then you could expand it out to these, because some of these do move quite a bit per day. So then you could start looking at opportunities in all of these over time. Like I said, break it down a little bit at the start if you want. After you feel comfortable, then you could potentially add in looking for trades in these ones. And you'll notice these all still contain these major currencies. But some of these are just have lower volume or whatever. And yeah, so I've just kind of broken it down. Some of these you could definitely start trading earlier on too. But once we're comfortable with these, then we can add in, and I just call these the oddballs. They're, major countries' currencies as well. But the thing about these is that the pip values can vary drastically from maybe what you're used to. So pip value is how much one pip is worth in your own currency, whatever your account currency is that you open the account. And so some of these just may have very different pip values. They may be moving like 1,000 pips a day, which is way more than the euro US dollar, which typically moves 70, sometimes up to 100 pips a day. So you might have some of these oddballs that are moving 1,000 pips a day, but the pip value is only like 10 cents on a standard lot or $1 on a standard lot, whereas the euro US dollar, each pip of movement is $10 US per pip. So these can just vary drastically. So you want to have a really good handle on pip values and things like that before you start trading these. So start out looking for trades in just a handful of currencies just to get used to it, get your discipline, master your setups. Once you're profitable in a few, then start adding in others. If needed, if you find you're kind of overwhelmed by just trading a handful, then stick with that, or even reduce the amount to a manageable number of currency pairs you're watching. And as mentioned, some of those more exotic pairs, those oddball ones I call them, they're still major countries' currencies, but you are going to need to have a good handle on pip values and calculating position size and all that before you start trading them. So add those in slowly if needed. You can monitor and track various charts and setups using a watch list, like the ones available in TradingView or other platforms. So as we see here, you can end up trading a lot of pairs, right? You're going to be trading these, or at least watching for setups in them So this ends up being quite a few pairs. Even if you're just here, right, you got 2, 4, 6, 8, 10, about 12 pairs that you could be watching. It's nice if we have kind of a setup ready to go to easily monitor trades. So one of the easiest ways to do it is, let's drag this in here, is you'd have like a TradingView chart or whatever your charting platform is. And I'll talk about, if you don't have a charting platform, like I do recommend it, but if you're just using like MetaTrader or something like that, I'll talk briefly about that after I go through this TradingView watch list. So what you could do is create a new watch list. So where is it? Create new list, and then you could add the pairs that you want to monitor to the list. And then you'd have this watch list here. It's always just sitting there. You'd pull it up, and you can just flip through your pairs. And let's say there's a trade setup potentially forming in one of these pairs. Then what I like to do is, you can say, if it's kind of close to forming a setup, maybe you put it as yellow, so it just kind of alerts you, hey, there's possibly a trade in the Australian Japanese yen. Or if it's like an imminent trade, maybe we put it to green and just say like, hey, come back to this one, there's a possible trade. And how you go through this list is up to you. What I usually do is I'll go through, so this is just my Forex normal list, kind of just some, they're all involving major currencies. So what I'll do is I'll go through the whole list, and I'm just making these up as I go, but maybe if there were setups in these, I'd flag them as green, and I'd go through the whole list before I put out any trades. And then once I'm done that, then I would go back to these ones I've flagged as green, analyze them a little bit more, decide like, hey, yeah, exactly where do I want to put up my orders, all that kind of stuff. Is it a valid trade? Go through your routine for setting up trades, where your profit target's going to go, stop losses, all that kind of thing. Maybe compare some of the trades, because you may find like they're highly correlated. So you've highlighted 3, but they're almost all the exact same trade. The trades, like the chart's moving the exact same way. So then you may decide maybe like one more than the other, or you might take all 3 with a partial position size, because it's essentially the same trade. So if you took all 3 with a full position size, you're almost taking 3 times your risk, potentially 3 times the profit as well if it works out. But something about swing trading is that you want to be aware of correlation, right? Because if you think you're only risking, X amount, but you're trading 5 pairs that all move almost exactly the same, then you're either going to get probably stopped out on all of them, or you're going to make a profit on all of them, which is great. But if you lose on all of them, you could take a huge chunk of your, account if you have a whole bunch of pairs that are highly correlated. So that's why I'll kind of go through the whole list, see which ones catch my attention, and then go through those individual ones. And then I have another list here for, the kind of what I call the oddballs, the little bit more obscure. Sometimes the pip values are a bit different. Some lesser known currencies, like Mexico is a well-known country, but the Mexican peso is not traded as heavily as some other currencies, so that's on this list. There may be some opportunities there, but so then I'll go through this list and do the same thing. Just what's going on? Are there any interesting trades out there? I'll flag them, and then once I've gone through the whole list, I'll go back to those ones that I've flagged. If you're using just a like MetaTrader or something like that, and you don't want to use other charts, what you can do is you can set up, just create new chart, create new chart, create new chart, and so at the bottom of your screen, you'll have a whole bunch of little tabs, each with the currency, and then you can flip through them that way, right? So you might have like 20 currencies along the bottom of your thing, and you can click on one just to go to the chart, or you could just have a list of the currency pairs you trade and open your charts that way. That's going to take a little bit longer though. So I like this way. I have done the MetaTrader way where you open up a bunch of charts along the bottom and just have them open there ready to go. Look at one chart at a time, then click on the next one, and that's another way to do it. So I hope you found this video helpful. My name's Cory Mitchell, and I run TradeThatSwing.com. Loads of trading resources there. Thanks for watching. Like and share if you found this helpful, and hit the subscribe button to see our latest trading education videos.